Pump or dump? Pump and dump, or dump and then pump? What do you think? We will talk about that in detail, but before we get started, welcome back to Sin City Crypto Live. I am one of your co-hosts, David, and we're coming at you from our studio here. And it's getting oddly humid, Las Vegas, Nevada, with our daily, only on the weekdays, live shows. Before we get into the content, quick disclaimer: nothing that anyone says on this channel should be taken as financial advice. So please, as always, do your own research. With that out of the way, I'd like to introduce you to the man out here saving turtles by not wasting on plastic. Big Rob, what's up?
Hola! It's your boy, Big Rob, back in the house, saving turtles. If you're wondering what the hell he's talking about, I watched too many documentaries on plastic. I came in, I got a bunch of filtered water for the office, and so I am trying to, hold on a second. Is that a plastic bottle on your desk?
Wait.
Show the man.
It was already bought.
Show the man. Show the man.
It was.
Hold it up. I gave you this long ass speech about how plastic.
But we had already bought it. Someone's got to drink it.
Okay.
It would be a bigger waste if we bought it and didn't drink it. Anyways.
So, F the plastic, you know? And it'll save us money. We're going green, so it'll save us money because we don't have to keep buying cases of water.
So
you're
a fan of
got
those,
to buy a new filter every once in a while.
So you're a fan of those paper straws that dissolve in 10 seconds?
Absolutely not. Paper straws are the worst thing ever. They just fall apart and crumble. Next thing you know, you're just like, feels like, you know those pixie sticks when you like are chewing on them and they get all wet and
then you start eating the anyways, dear intro.
So
you didn't do your welcome.
Big Rob, welcome to Sin City Crypto. If it's your first time checking us out, we are an entertainment-focused cryptocurrency channel where we take the old, the boring, the stale information, and we package it up in a fun and sexy way. Also, here at Sin City Crypto, we don't just do live streams. We also do deep dives, short videos. We post on Twitter, and we got all kinds of other juicy information coming at you from all different angles. And don't miss your information by hitting the notification bell. Also, like the video. If you haven't liked the video yet, we'll give you approximately 5 seconds to like the video. Cool. Now, also, if you're new, subscribe, helps us out. Also, roll call. First in the chat, we got Jimmy. Jimmy up in here first.
Jimmy Wimble Nimble, like the Litecoin.
Nimble. The insult. Don't you talk about my man Jimmy.
Sorry,
like that.
Jimmy.
So Jimmy, round of applause for Jimmy for being first up in here. Also, we got Strictly Sports, Robert Salazar, Mark Brokey Yoshi. We have Nordy, K Factor, Why You Loud Gang, and then Mobile Sage.
Moby
Sage. And then Glenn Stockley. Is Glenn new?
Whatever. He's new.
Anyways, hola! Welcome to Sin City Crypto. We got Sir Babe, R.A. Daniel, Hanya. Also, we got Atomic Atom and MD OPP.
Doc Op. Yep.
And Hit or Miss, Crypto Neck.
Jason Squires. Shizzy.
Metaspawn Crypto's up in here.
Shizzy and AZ.
Shizzy, AZ.
Shazazz. Shazazz.
And if you are new and you're watching, make sure you say hello. That way I can say hola. And then, yeah.
We got 34 viewers and 24 likes.
You know what? We haven't opened up the club in a while. I propose we lower the limit. If everyone, okay, here's the thing. Our limit is at 60 for opening up the club here. I think we need to adjust for inflation, stagnation, whatever you want to call it. Why don't we do 50 people? When we get to 50 people in the chat today, we're going to open this damn club up because we haven't done it in a while. And your boy need a little
Tell him the
excitement.
real reason. Tell him the real reason.
The real reason is that I need some excitement.
No, tell them the real reason. What did you add?
We've been working on our.
There you go. Man, we got a packed show for you today. If you're watching us after the fact, we will have timestamps in the description or on this video so you can navigate freely as you choose. But we do recommend watching it from beginning to end. We're talking, obviously, about the Fed rate hike. What that means, we're going to look at some Solana chart, Bitcoin chart. We're also going to be talking about FTX and their stock trading just went live an hour ago. We're going to talk about that. Also, dynamic NFTs. Pretty cool concept. So we got a packed show. So we're not wasting any time. In 20 minutes, we will have the official number from the FOMC meeting. Are we going to see 75? Are we going to see 100? I'm sticking to 75. Robin, what's your bet on?
I think we're coming in at 100.
Okay.
100 comes in, 1 full percent, crash the markets, panic, sell off.
You are totally wrong. You will be proven wrong, my friend. We're coming in at 75. I have found a new chart, a new derivatives market that solely focuses on short-term interest rates and how the Fed will react. It's from, if you like reading, okay, this is an amazing book. I decided to get into this when I saw the Fed start hiking interest rates. So great book.
I like how you assumed all of our viewers don't like reading. If
Well,
you
I know
like
you
reading.
don't like reading. Well, you don't like reading, probably because you can't pronounce words.
I do like reading. I choose to read certain things other
Fair
than
enough.
others.
I bought you a book. You didn't even read that. So we're going to get into all of that here. But first, before I send it over to Robin to do the market watch, I want to take a look at the crypto calendar. What are the top happenings this month and next month in the world of crypto in the top 100 coins? Rock, we're going to pull up my laptop. So some important things to notice here, or to note here, Algorand will be getting a white bit listing today. So that'll go live with trading pairs in USDT and Bitcoin. Obviously, we have the Vassal hard fork that is still set to go live on the 31st of this month. So in T-minus 4 days, Cardano will get a massive upgrade in TPS, followed by Hydra. So the network is getting better, is getting faster. Also, the Gurley merge, the very last and third testnet of the Ethereum merge to proof of stake, will go live August 11th. That is on schedule. Also, we have a network upgrade to Monero that actually got pushed back to August 13th. And then the last one I want to talk about, obviously, the huge one, still on schedule. The mainnet merge, the merge of the Beacon chain to the Ethereum mainnet, will happen as of right now on September 19th. So with that being said, Robin, I'm going to send it over to you to look at what we got going on in the markets.
All right. So let's take a look at Bitcoin, crypto, and where we're at right now.
Bitcoin and crypto.
Bitcoin and crypto, yeah. Not just one, but both. All right. We got Bitcoin coming in at 21,486. And we got Ethereum at just shy of $1,500. It's at 1,500 on the bottom price. The other right side price, it's 14. Either way, pretty.
We like to diversify here at
So, I think we're not going to see any big movement. We haven't seen big movement lately. The last few days, I think everyone's just on pins and needles, waiting for what the Fed is gonna announce. It's in less than 20 minutes, man. 18 minutes.
I mean, it's up. Bitcoin's
Well, I'm excited, and so yeah, I mean, Bitcoin. It was at what 22,000 yesterday, and then it shot up and down a little bit. I don't know, man. I think everything is just kind of on waiting, man. I mean, not only crypto, but I mean, your lenders are waiting to see what comes in. Stock markets are waiting. Commodities markets, everything's on pins and needles, waiting to see if there is any giant shakeup. Will we get an over interest rate hike over than what we think, or maybe even lower? I don't think 0.5%'s on the table, right?
No,
I mean,
hell no.
Theoretically it could be, but realistically,
If 0.5%'s on the table, everything's going to pump 20%.
Oh yeah, we're gonna
That's
freaking
not
moonshot everything.
I would bet my
Yeah. So then, what else we got?
Fear and Greed Index, huh? 28.
Yeah.
You think we'll get under 10 ever again? Well, not ever again, but in this little cycle we got going on,
If Bitcoin drops under 19,
we'll get to
yeah,
under 10.
Especially if it drops under 19 dramatically, or in one or two trading days.
Yeah. Pretty low volume on the Bitcoin chart here.
Yeah.
Did see a spike early. This is a 1-day chart, by the way. We did see a nice spike around 8:30 or about 6:45 in the morning.
Yeah, we're gonna get a big movement in one of these directions here in about 20 minutes.
So-
We'll come back to the charts here in a minute.
Yeah.
Or what do you got? You got a chart?
Yeah,
as
well, I got a Bitcoin chart I want to talk about. So I got two time frames. The first time frame I'm going to look at, this is the 1 hour chart. Okay, so when you look at patterns and technical analysis, the lower you go on the time frame, the less reliable it is. But nonetheless, on the 1 hour and on the 4 hour, we see a bullish flag forming. But on the daily chart, we see quite the opposite. We see the opposite. We see a bear flag forming. Now, can both be true at the same time? Yes. And here's why. If we go back to the 1 hour chart, okay, and I expand this, and we say, all right, if we break above, right, if we break out of this pattern the way we should, which is to the upside, we measure the width of the channel here, which is right at, let's call it 6%. And if we measure this move from here up 6%, you're looking at a $23,388 Bitcoin. So this can happen, but if we go back to the daily chart, break to the downside can happen again. And even if that bullish pattern plays out on the hour chart, right? And what was that number? Was 23,600. It is still well within this channel, this uprising channel we have here. And with this one is going to be a big one. When this breaks to the downside, we're looking at a 13% move, which if we take from the bottom of this here and we go 13%, you're looking at a $18,500 Bitcoin. Now, of course, please remember, TA is probabilities. It is not a certainty. Percentages, what's probably going to happen. So short term, I think we see a pump to close to 24K. But over the next 3 to 6 weeks, I do believe we will get. Now, I don't know if we'll fully complete this what was it, 12%, 15% move to 18,600, but we do have a lot of support around 20K. So we'll see. If we break under 20K, we're definitely visiting 18.5, probably 17.5, where we worked down to here back in June 18th. So yeah, that's all I got as far as Bitcoin chart.
Yeah. Well, let's revisit the markets afterwards, because like I said, not
Yes.
too much movement. As far as big gainers, Ethereum Classic's up, surprisingly, up 17% for the day, and Lido Finance and Quant are up, and then some of the biggest losers, everything's kind of flat here, so not too much going on, but yeah. Now
People are waiting.
now the stock market is not waiting. So in crypto, we were kind of hanging out, seeing what's going on. But right now, there have been a lot of quarterly reports that have overperformed expectations. And so we're seeing a lot of green in the markets, green in the streets. People are excited. Now, will this hold up with the Fed decision? We'll see. NASDAQ up 2.5%, man.
Huge.
So we did have a couple of red days, so nice little retracement here on the NASDAQ. And a couple things on traditional markets. The 3-month supply change, and the M2 money supply. So basically the money in circulation, both that is printed and in the form of bonds and savings accounts, checking accounts, all of that is the M2 money supply. And with that, we have finally seen a dramatic drop of 0.3%. So
Seeing where we were,
yeah.
Back in May.
Yeah, so this is
15.4.
the biggest drop. This has been the biggest drop since this 03, looks like.
Yeah.
So, it's been a while since we've went backwards on printing. So
Don't worry, it'll go back. It'll fret
We're at,
not, guys. It will come back.
46 viewers, man. I feel like we're going to open up the club today.
Definitely are.
Excited. Now, so we've heard. So what does this mean? So this money supply contracting, it all has to do with the quantitative tightening. So quantitative easing is the buying of bonds, basically corporate bonds and corporate debt. So if you're a large corporation and you're struggling to stay afloat, the U.S. will basically buy some of your debt from you by printing money. But now they're doing the same thing, but as debt is getting repaid, they're just basically removing that from the supply, aka burning, And so that's where you're getting your loss here. So good to see that we're starting to go in that direction, because our balance sheet here in the U.S. it's ugly, bro. Now, a couple things. So big news in White House: the Senate passes bill to boost U.S. chip production and Chinese competition. So here, the Senate on Wednesday passed a bipartisan legislation aimed to help U.S. compete with China by injecting tens of billions of dollars into the domestic production of semiconductor chips. Now, not a big fan of increasing our spending, as we mentioned with the budget being a little, and obviously with our debt.
But if you're going to spend money,
if you're going to spend money, why don't you spend it on an emerging sector that is going to keep us profitable and competitive in the future? So I do think this is positive. And we saw with the supply chain issues how important microchips are. They're in every good that we use nowadays, as far as transportation and appliances and just leisure.
Not to mention military, bro.
Yeah. There's so many, and we saw that, the dramatic effect it had on our auto industry. There is, I think, nowadays the newest cars actually have like up to 100 computer chips in them. Yep. A lot of them are smaller, but and as technology evolves in the automotive sector, it's only going to increase exponentially. And then you also have the likes of graphic card makers was also a big bottleneck. Yeah. I think this could. This, yeah.
I think this could spell good news for the U.S. and bad news for a country like Taiwan, who essentially supplies like 60 or 70% of the world's semiconductors. And so we'll see how that plays out, but that's a discussion for another day.
Well, the U.S. still makes the most of the like high end. They make the ones that have the most what's that called, like transistors in it, anyways, the high end ones that go into the high end computers. Here's
the thing though, Taiwan is years ahead in the nano ones. So as technology gets better, they're 4, 5, 6 years ahead of the rest of the world as far as manufacturing the smaller nano ones, which is used. Obviously, you replace the new with the old. So they've had a chokehold on that market for such a long time, and seeing a country like the U.S. pour billions of dollars into that market, good for the U.S., bad for Taiwan.
So then moving ahead, we also have Janet Yellen. Yellen like always. And so Janet Yellen discusses price cap on Russian oil with the UK's head of Treasury. So U.S. Treasury Secretary Janet Yellen highlighted a proposed price cap on Russian oil on a phone call with British Prime Minister Nadeem
Zawahi
on Tuesday, and a move to reduce the impact of war on the Ukraine on the global energy prices. And so this is so stupid. And all you're realistically doing is the countries that you're going to do this to. So the countries that get on board with putting a price cap, what do you think Russia's going to do? Okay, you can sell, say, a barrel of oil for $80. You sell a barrel of oil for $80, and you can either sell it to the U.S. for $80, or you can sell it to India for $110. What do you think is going to happen?
Well, here's the thing. When those sanctions came down, India and China picked up the slack. There was zero detriment to the Russian economy as far as their money coming in from their oil production. India and China picked up the slack. So here it's like, I feel like they're focusing on the wrong things.
It's the same as like any other marketplace. Bitcoin is 45,000, and I can go and sell it on Binance for 45,000. I can sell it on FTX for 45,000. I can sell it on KuCoin for 45,000. Why the hell would I sell it on Coinbase for 39,000?
You like Coinbase,
but you know what I'm saying? Like, it doesn't matter if that's my most used exchange. Why on earth would I go and sell it at a discount to someone else when my competitors or other merchants are willing to pay the market value? If the market says a barrel of oil is worth $110, a barrel of oil is worth $110. And if you have a handful of countries that are saying, hey, we're not going to pay $110, we're only going to pay at most $80, cool. You can say that, but it ain't going to stop the country from selling it to where they want to. It's basic economics. I don't understand why they don't understand basic economics. I'm not even talking about the economy. I'm just talking about basic economics. Like,
it's literally supply and demand, bro.
It's like an associate's degree, entry level business management course here, and you have the U.S. Treasury Department head that has no idea on how a free market works.
But are you surprised, Robin? She did say inflation is transitory.
God, man. It's like when you go on Amazon and you go to buy something, you say you go to buy a TV on Amazon, like Samsung 50-inch, whatever, smart TV. You go to buy it, it's $4.99 Amazon Prime, and it says available at other retailer for $5.99. Why the hell would you buy it there? It's just the fundamentals of supply, demand, price, and what the market sets it. And so anyways, this is absolutely pointless. You're wasting your time. Why don't you work on something a little bit more efficient? Russia's not going to start selling oil at a discount because the U.S. decided to impose a price cap.
You sanctioned them. Like, hey, we're screwing you over. But hey, do us a favor. We'll get you back sometime later. Just sell the oil for $80.
Now,
let me go over this before the rate hike comes on. Okay, so I prefaced this earlier. So the euro dollar, it is the deepest and largest liquidity derivatives market in the entire world. They focus on short-term interest rates, and they don't care about sentiment. They don't care about traders. They look at what do they think is going to happen, what has happened, and how do you think the Fed will act? Okay, Rocco, pull up my laptop. So here I've zoomed out. Okay, I zoomed out 5 years, and in the candles you have the euro dollar, and the orange line is the federal funds rate, the interest rate. And you can see anytime you see large movements to the upside, it happens right before a drop in the interest rates. And to the contrary, anytime you see a big drop in the euro dollar market, you will see a significant raise in the federal funds rate, which is the interest rate. And I went back, and you can just, if I go back to all time, you can just see how divergent these are and the way they move. And if I go back to the 1 year, if I go back to the 5 year, you see this big candle here, okay? This candle printed on June 6th. The 75-point interest rate hike that came on the 15th of June came 9 days later, and it was a surprise to everyone. Everyone thought 50 basis points. Some even thought 25. And when the Fed dropped the hammer with 75, this candle had printed 9 days before. So it's about as good of an indicator as you can see. So the reason I bring this up today is because I'm looking at what's been the price action over the last, few weeks. We've been pretty stagnant. We did see this big drop here back on June 13th, but that was also before the 75 basis point hike in June. What have I seen since then? Sideways chop, which tells me what everyone is expecting, 75 basis points is going to happen. If I thought if 100 was going to happen, I would assume we'd see a equal drop like we did in this candle here. So this is something, and you can see here, if you go back, this was February 20th, okay? So a month before the whole pandemic thing and everyone shut down, we saw a massive move to the upside. And guess what? Interest rates were cut down to zero. So this has been a pretty solid indicator. And this is something I personally am going to look at. And when we start seeing a reversal, we start seeing the euro dollar market go up, we can assume that the monetary policy will start to ease and the Fed will go dovish. Because what you got to remember is what the Fed does here in the US, it impacts the global markets across the entire world, whether it's China, Russia, Japan, anywhere in the world. The Fed sets the rate and it impacts the global economy. So just something I want to share with you guys.
Speaking of global economy and speaking on inflation and interest rates, Pulling my laptop here, Rocco. Argentina. Inflation is out of control there in Argentina, and everyone is now poorer because of that. So here, with inflation running at 64% in the last 12 months, you thought we had a bad here, up 64% in the last 12 months alone. Consulting firms forecasting it could hit as high as 90% by the end of the year.
That's
the
ridiculous.
prognosis is grim. The third most populous country in South America. The situation for young people is basically leave. Then that in a country with good public education. This is an interesting comment here. So this is a quote. Either way, that in a country with good public education, with free healthcare system, you consider leaving because you don't feel like you have a future. So this is someone's opinion. Now, my opinion, nothing is free. So this whole free healthcare, and this might be one of the systemic reasons that you even have inflation, because somebody picks up the bill. Let me ask you a question. Even in Canada or France or wherever you have free healthcare, do the doctors work for free?
Hell no.
Do the construction workers that build the hospitals work for free?
Hell no.
Do the materials that the hospital is built from, are they donated to them? No. And the ambulance drivers that drive you are also employed. So all of these are salaried positions. These are all upkeeps and prices that you have to account for that is passed on to the taxpayer. And if they don't generate enough taxes, well, they just print more money. And that's how you get into the situation that you are now. Not to say that healthcare isn't a priority. I'm not saying that there aren't benefits to having healthcare integrated in taxes. But when it comes to the association with free, nothing is free. And perhaps, at the end of the day, I like my roads. I like my schools. I like all of that. However, it all comes at a cost.
Robin, the numbers are in.
We're in?
We're in.
What is it?
75, baby.
75 basis points. Well, that's expected, Tim.
Yeah. The Federal Reserve on Wednesday enacted a second consecutive 75 percentage point interest rate increase as it seeks to tamp down runaway inflation without creating a recession. We are currently now in the range of 2.25, which a lot of people call the threshold. So now anything over this that we raise, then really we'll see a contracting in the economy. And you can see if I go back to the markets knew this was coming. Guys, what you got to remember is people the Wall Street, they know these things before it happens. And you couple that with this chart I showed earlier, you can forecast. I would have assumed if 100 basis points was on the table, was going to happen, we would see a massive drop. We didn't see that. And so 75 it is. Now they do have in August, they have they're going on vacation. The Congress and the Fed.
Oh, well-deserved vacation.
Well-deserved. You've done such a great job of ruining our money that we will
take a month off.
Yes. Listen, now
in all honesty, them taking a month off might actually help. They can't. Only so much. The printers are they unplug.
Printers
those
are
things.
off. Yeah, they unplug all their power. You know what, Robin?
They're not putting out any more bill proposals or spending or whatever it is.
Before we move on, Robin,
what's up?
We're at 51 viewers.
We're at 51 viewers.
Rocco, open up the club, baby.
Let's go.
That was me, DJ. Woo! If you are new here at Sin City Crypto, we like to have fun. When we break milestones, we are a young and growing channel with a young and amazing community behind us. So we like to celebrate big milestones when we hit.
And if you are old and in our community, we also appreciate it.
I mean, like we're young growing, like we're new. Jesus Christ.
I'm just saying, man. I got much love for my elderly people.
That's not what we're talking about.
Respect your elders.
Yeah. All right.
I'm also older than you, David.
Yeah. Robin?
Yeah.
You have anything else on the traditional markets you want to talk about?
Yeah, I have IMF. So a few days ago, the
My favorite.
IMF says global outlook looking dark. So IMF's July update on the world economic outlook titled "Gloomy and More Uncertain," so very similar to Las Vegas, points to higher than expected inflation and a contraction of global outputs as indicators of incoming poor economic growth. The report states in sufficient terms that there are likely economic slowdowns ahead. Also, in other economic slowdowns around the world, we have Chinese property sales are set to plunge 30%,
Damn.
worse than in 2008. So China's property sales are set to plunge this year by more than they did in 2008 financial crisis. National property sales will likely drop 30% this year, nearly 2 times worse than their prior forecast. Such a drop would be worse than in 2008 when at that time they fell 20%. Now, there's supposed to be less correlation on the global markets when it comes to the Chinese housing market. So a little different than, say, the U.S. because you had so many U.S. banks and so much of the major companies here in the U.S. heavily invested in mortgage-backed securities. Now, times have changed, and even with China, they're not quite as intertwined with their mortgage as the U.S. was. And so, anyways, could just be that sector, but I don't know. To be seen.
I'm more worried about if they're going to do another lockdown because we see what that's happened. But I want to show a tweet I found. So here in the U.S., midterm elections are coming up. Okay, so follow me along here. Okay, this is a chart from Mark A. Caputo, the national political reporter for NBC News. This is from Twitter. So this is a list of what states are getting an influx of people moving there and what states are getting an influx of people moving out. And again, follow me along. So the top 3 states, you have Arizona, Texas, and Florida, all ran by a Republican governor. Then on the bottom here, you have California, New York, Illinois, Massachusetts, Louisiana, New Jersey, D.C., and Maryland, and Minnesota, and Hawaii. 8 of those 10 that people are leaving the state from are Democrat governors. And I'm not making this political, but what kind of implication can we extrapolate that this would have on the midterm elections? People are obviously unhappy living in Democrat-ran states and are moving to Republican-ran states. These are facts. This is not my personal opinion. I'm not saying I'm a Republican or Democrat. I hate all politicians equally. But what does this mean?
You say you hate all politicians equally?
Yes. What does this mean? Not only for the traditional markets and fiscal policy and monetary policy, but for the crypto markets as well. It is safe to say that there are more Republicans that are pro-crypto than there are Democrats. Yes, it's not a big gap, but there's more.
Yeah. This is one of the few subjects that do fall in between party lines. And, it may lean more Republican, but I do think that just general reception of cryptocurrency is that it is an emerging technology that whether you like it or not, personal feelings aside, it's coming and it's here, and you're gonna have to at least acknowledge it. And so there are a few vocal oppositions.
There are. So what this tells me is, on which we already thought was coming, but the midterm election, now the Democrats control the House and the Senate. We expect that to flip for the Republicans to control both. And if no bills are able to get passed with Democrats holding both the Senate and House majority, I think we'll actually see some decent regulation like the Senator Lummis and Gillibrand bill, the Crypto Fairness, Digital Asset Fairness Act, whatever it's called, the stablecoin bill, which we're going to talk about during our talking points. And on top of that, I think you'll see a Fed chair that was nominated under Republican president aligned with the monetary policy of the same party. We're on the same party lines, right? Republicans have been known to be more fiscally I don't want to say responsible, but more fiscally, you know, like they think about that stuff more. They're a little more conservative. So a big shift is coming, and we have some stats to back it up. Pretty interesting. I found that on Twitter today. I figured I'd share with you guys. But that's all I have as far as traditional markets. And yeah, unless you got something else, Robin.
That's it.
Good. All right. Hot take. Let's go.
It's hot.
Before we get to the hot take, we have a new person in our chat. Robin, will you give my friend Delma a welcome?
Delma's been here before.
Delma has.
But anyway, Delma, hola! Also, just a quick shout out. We got Liquidated up in here, Chris Steinhoff, and we also got Justin up in here. So Handy checked in, Tox, Redman, Big D. Yeah.
Welcome in, my friends.
Whoever else I missed, welcome.
All right. So our hot take today, obviously the biggest news of the day is the Fed interest rate hike. So Robin, was this the right move? Should they have done 100? What do you expect moving forward, and how will it affect the economy until the end of this year? And I'll let you go first.
Honestly, I was just hoping for the 1%. I think that inflation is so out of control. And honestly, there's really not much the Fed or the US government or anyone can't really have a dramatic impact on this inflation. There's only a couple variables you can change. And one of those is the federal interest rate. And unfortunately, hey, you know what? If people are spending less money, then there's less competition for price, and there's going to be less production. And in doing so, things are going to get cheaper. Just that's how it is. You look at a store going out of business, everything's liquidated, everything's on sale, everything's a certain percentage off. Kind of think of that in the global economy. If all of a sudden there's substantially less people in the market purchasing, then there's going to be substantially lower prices. And that's essentially all inflation is what is the price of your average goods now versus, a different point in time in the past. So we go by the 1 year. And so the way we got into the mess is obviously the money printing. We in a 2.5 years, basically 2 years, we printed 5 times the amount of money, or created 5 times the amount of money that we had in circulation from the get-go. And so unless you burn or remove or destroy that same amount of money, it's just a given that this is the outcome. And so it's just an ugly situation, bro. I mean, we're looking at, we discussed what happened in Argentina. We're not far off of there. It's like, we look at it, we're just like jaw dropping. We're like, oh my God, 60%. And I'm not saying that we're going to get there. I don't even think we'll ever get to 15%.
I think we're at 15%.
No, I mean on the CPI. Yeah. Because if the CPI is 15%, then realistically it's probably 45% or something drastic like that. Now, so it's upsetting, man, because if you're not into crypto and you're just, say you're 50 years old, say you're retiring, say you're already retired and you got your pension, and you're like, cool. Hey, you're budgeting it out. You're like, okay, I got my pension, I got my retirement. And you know what? I get $4,000 a month. That's enough for me to live. But now you can't go and increase your pension. You can't go and increase your retirement money that you earn. Now, Social Security does adjust for inflation, but
that's peanuts.
Realistically, you're getting the same amount of money as someone that's retired. And if you're getting the same amount of money as someone who's retired, but yet if you're renting a condo or you're in elderly living or wherever you're at, the price of that is doubled.
Or you need long-term care.
That's what I'm saying.
Yeah.
All of the long-term care, like you want to talk about rent going up. Holy crap.
Yeah.
The long-term care and elderly assistance is shot up.
Bro,
crazy.
I used to sell long-term healthcare insurance, and every year, just without inflation, it would go up about 4 or 5%.
Yeah. And so how can you continue to live under a certain perception of, hey, this is enough money for me to retire. And now you can't go back to work. I mean, you can, and some people are forced to go back to work, but it kind of sucks to spend 40 years of your life, you know, dreaming of this retirement and setting everything up, and you reach your goals and you have mapped everything out. And you're like, hey, I got enough money to do this. And then, oh, lo and behold, politicians just decide to print a bunch of money and act stupid. And then now you have Gam not able to not able to even pay her rent.
You leave my mom at it.
Oh.
That's what my kids call my mom. Look, what we're gonna have to see, and it's not at this level yet, okay? But in the 70s, you had two Fed chairs. You had Burns and Miller. They hiked up the interest rates, and then they let the foot off the gas. Interest rates came back down, and guess what? In the 80s, it shot back over 20%. And that's when Paul Volcker came in and just absolutely annihilated the effective federal funds rate. He raised interest rates so high, the economy essentially went into a recession for 2 years, a 2-year recession. No one was buying homes. No one was buying cars. And then everything started moving back up slowly. Essentially, we're sitting here in a similar situation. We're at the cusp of it. And should they have gone 100? Probably. Are the midterm elections, are politics playing a role in why they haven't gone more aggressive? Most likely, yes. There's not a coincidence that, you know, out of the last 10 Fed chairs, only 3-4 of them have visited the White House more than once. And Jerome Powell has already done that. He had a meeting with Biden 2 months ago. He had a meeting with Donald Trump as well. The point I'm trying to make here is if we had an actual Fed and a government that was truly worried about inflation, they wouldn't bump it up 75 basis points. They wouldn't say we're capping the amount of money you can spend. That is either stupid, you don't understand, which I don't believe. I don't believe the people in these positions don't understand or not smart enough to understand how to fix this problem. Okay. And Dylan LeClaire, he's a senior writer for Bitcoin Magazine. He brought up a great point. He said inflation helps the U.S. debt. And the debt, the consumer debt to GDP went from 134% to 124% as inflation started to rise. So Robin and I discussed this before the show. Although it doesn't change the amount of debt you owe, it does ease some of the interest payments you have to pay.
Wait, you're still making the same interest payment.
Correct.
24% is still 24%.
But you need less. You need less dollars. Like the dollar gets
the amount, the percent that is the total debt to what your entire worth is. So if you have $5 more trillion in circulation as far as money, then and you owe X amount of money, which the variable has stayed the same, the debt doesn't change. You just debase the debt. The same way that you're debasing people's spending power, you just debase the debt. And that would make sense if you were paying off your debt. If you were saying, hey, we printed a lot of money and to bail people out, we have a lot more circulation, and let's start tackling this debt because now the debt has been debased. That theoretically would work. They would never do that. They would never go and pay more debt than just simply the interest payment. That's the fundamentals of our government, is to borrow, make interest payments, and just call it a day. And then borrow more when you need it. And so
let me ask you this question. A lot of people are saying by the end of the year, the Fed's going to pivot and either stop hiking or decrease interest rate. You think that's going to happen?
No,
I don't either.
Every analyst is forecasting by the end of the year, by December, that they're going to pivot and start turning on quantitative easing, like and lower the interest rate. Like they're not going to.
I don't see that happening.
Here's the thing. We're not going to see a inflation number that's even close to 2% for another 8 months. And so
2%.
That's what I'm saying. Close to their target range.
We're not even going to see 5% in 2 years in 8 months.
No. But this is all year over year. And so if you slow down the economy, you go into a recession, less people are spending, the price of goods go down. If you take it at its peak in the same way that you can look at the price of Bitcoin at the peak of 2017 and then look at it a year later, it's going to be down a significant amount of percent because you're just looking at it from year to year basis. The 1 year compared. So if you look at 2018 compared to 2017 and the price of commodities, they were significantly down in the percentage. And so the same thing can be said when you look at percentages on year over year. And if spending was at its height, while money printing was at its height, while the economy was, at its highest amount of volume, then you fast forward a year deep into a recession, it's gonna be lower. Like at least it'll be closer to zero. And so the price of gas should go down. And when the price of gas goes down and the price of electronics go down because the supply chain goes down, and on top of that, the economy is just in the dumps, so there's just less spending. There's gonna be a pullback in significant pullback in the inflation. And so the idea that the inflation is just going to be 10%, that would mean that it grew 10% on top of last year's all-time highs, and that means the economy never pulled back. And so we're in a recession. We're going deeper into a recession. That's not in question. And the GDP numbers are coming out tomorrow, and tomorrow we're going to see that we are officially in a recession.
Hey, no, we're not.
Yeah. Well,
we're not
per the
according to the
government.
White House.
So, yeah, at some point, yeah, they'll probably lower interest rates. I think they will, but it ain't going to be for about another 7-8 months. And so that's when you're going to get to the height of last year compared to the recession of this year. And the percentages are going to balance out. And you're going to see, and I wouldn't even be surprised if so we hit 9% the last 2 months. So I wouldn't be surprised come March next year, we see a negative interest rate. If we're coming out of a recession and the prices of gas have stabilized, went down, the price of a barrel of oil is say $60, you could see a negative 2%. It's possible. And I think it's actually healthy to, in the same way that you get pullbacks in any market, essentially the dollar and its value is a market. And so we saw this giant run up of inflation. I think a natural pullback in inflation and even short-term deflation is healthy when you compare it to year over year. Oh, I think that's coming, but I don't see it coming anytime soon.
You see it playing out like it did in the 70s and 80s, where it started to come down and then just shot right past it?
I think, well, in the 70s and 80s, they initially raised the interest rate, and then it crashed the economy. And
inflation came down.
And then once it started easing and people thought it was cool, it shot back up again. And then they dropped the hammer one more time. So there's actually two interest rate hikes that happened within like a 1 year window. And so we look back at it and we just think it was just this dude just ratcheted it up. But actually,
Paul Volcker did.
Yeah,
in the 80s.
He initially put it up to like 5 or 8%. I don't know the exact numbers. Crashed the market, and then when people thought it was all clear skies, inflation started to take off again, and then he did it again, and then he went all the way up to like 14%.
Yes.
And so,
is this something we're going to have to see? I mean,
no, our economy has leveraged too much debt, too much interest payments, and the way that the global economy is all tied in with trade and GDP, and the leverage that the U.S. has, it's not really possible to raise it that high. You'll pretty much break the system because
you'll break the global economy.
Think of in the 70s, we weren't as heavily reliant on global trade. And why do I bring up global trade? Is for the simple fact that everyone buys and sells U.S. bonds and treasuries to have cash on hand to facilitate trades and borrow and to fund militaries and things like that. So that's all going to be significantly more expensive.
Also, back in the 70s, the dollar had just been established.
That's what I'm saying. It was so new. It's no way. I think at the most the economy can withstand is 5%. And even then, I don't even think they can get that high. 4.5 would be probably the threshold for breaking the economy.
The idea to beat inflation is you want the federal funds rate to be at or higher than inflation, which I don't see them doing.
Right now, the Fed just wants to bring that number down. I don't think they really.
But what I'm afraid,
they knew inflation was coming. They know it ain't going anywhere, and they know it's not going to go to 2. But what they don't want is another 9% next month and another 9% the following month. They just want to bring this thing down to 8 or 7, so that way they can be like, "Hey, look at us, we did it. We're our job accomplished." And then the following month, 6, 5, 4. That's essentially what they would like to do. They don't really care about the global economy. They just care about a number. And you think about a job where the customer service is in the dumps, but all the employer cares about is some arbitrage number. You're like that they hold all the weight on. They're like, hey, maybe in a restaurant industry they care about the Yelp score. But like, well,
right.
What about if you take that score away? Yes, we understand it's a big metric that follows generally the success of a restaurant, but you can do the same thing just to any industry.
Yeah.
It doesn't have to be.
We'll we're done with this topic and we're gonna move on. But we'll keep our eye on what's going on, and I will definitely keep my eye on that euro dollar market. So Rocco, before we move on to the talking points, can you pull up the let's see what the markets are doing. Right, we're almost 30 minutes into the announcement of the Fed rate hike. Let's take a peek at what we're doing here. So on the ticker bottom, I can see here we're up 6% on Cardano. Doge is up 6%. Polkadot.
Yeah, ETH up 5%.
Bitcoin.
Or no, Bitcoin up 5%. ETH up 11%.
Bitcoin's Bitcoin's according to CoinMarketCap, Bitcoin's sitting at 22,000, and then ETH is about 15.
Bottom ones. We got to mess. We're still getting these tickers together. Yeah, well, let's get one source so that way we don't have conflicting numbers.
So that the top box to the left is going to be your most accurate. 22,000, 1546 for ETH, up 6%. XRP up 2%, and then Solana up 5%. But I do think Solana's getting ready to move to the downside to about $26. So I did offload about 50% of my Solana. I don't have much. I'd originally bought some for the Disco Kitty Mint, and then I just had some left over. So we'll see. Anyways, all right, let's go ahead and move on to our very next segment of our show, our talking points. What's up, Drew? I think this is a short-term pump for Bitcoin, I believe. All right, first article we can talk about is FTX. They're making moves. Is in talks for the acquisition of BitThumb. FTX reportedly plans to buy the South Korea's second largest crypto exchange, BitThumb. The majority owner of BitThumb, Sear, confirmed to Bloomberg on Tuesday that he has been in talks with FTX about a possible sale of his holdings. Now, they won't. Now, obviously, they won't have 100%, but majority, and we know majority rules. Company BitThumb is reviewing all possible options, including a full acquisition or co-management of the exchange. Earlier this year, FTX acquired the Japanese crypto exchange Liquid. If the deal with BitThumb goes through, FTX will gain a further foothold in Asia, particularly South Korea, where crypto trading is very popular. Just some stats on BitThumb. They have more than 8 million registered users and currently process around $500 million in average daily trade. So you might not have heard about them, but they're pretty big. Second largest in South Korea, which we know South Korea is very, very crypto friendly, crypto savvy investors. Japan, South Korea, the Asian markets tend to be a little more ahead as far as when it comes to technology and digital assets than we are here in the US and North America at large. So, and I also want to piggyback this. The CEO of FTX just announced about 9:30 this morning, so about 2 hours ago, stock trading is now live for US users, all 50 states, including New York, as well as Puerto Rico and the US Virgin Islands. So you can now trade crypto and traditional stocks on FTX. So Robin, is FTX about to take over? Are they going to be number one? Are they taking over Binance? Are they going to be the go-to crypto and stock exchange?
I think at the current trajectory, they're going to flip Binance. And Binance was on the same kind of path last cycle.
Yep.
So 2017, 2018, Binance came into the fray, and not to say that they completely came out of nowhere, but essentially not too many people were familiar with Binance before 2017. And I kind of think it was the same with FTX. I knew of FTX, but it wasn't front and center until this last bull cycle. And now you see them making the same moves that Binance, or the same playbook that Binance had, where it was growing and expanding during the bear market, and basically scooping up other companies at discount. You're seeing that now with FTX, and they're expanding their services. So one, they compete. I think they're probably the biggest competitor to Coinbase here in the US.
Yes.
And abroad, they're competing 1-to-1 against Binance. Binance does more volume, does probably make more money than FTX at the current moment. But what FTX is doing is they're laying the groundwork to surpass everyone. And you have who do you think is a better business, CZ or Sam Bankman-Fried?
Define better in terms.
No, I mean, like, if you were to start a crypto
moves?
company today, who would you want behind the driver's seat? Let's just say you were starting an exchange.
That's a good question.
You're starting an exchange. Who would you like?
The
more humble, kind of like tech savvy,
CZ.
CZ, more of a blockchain background, or would you like more of the cutthroat businessman that likes the industry, but obviously, hey, business first, and business and image first.
I'd probably go CZ.
Yeah.
Even though my company would probably make more money with Sam, I think CZ, like, just from a ethics standpoint, and I'm not insinuating that Sam's done anything wrong or that he's not ethical. I'm just saying face value. Obviously, I've never met them, never talked to them. You just see what you read. But I would go CZ. What would you go? That's an interesting question.
Yeah.
What would you do? Who are you going with?
Probably go CZ.
CZ.
Yeah.
Sam Bankman-Fried looks like the kind of person that would find a way to get everyone together and just take over your shares of the company and boot you out.
Yeah, I feel like he's the kind of guy that would sleep with your girlfriend. Like, hey, man.
Hey, that's my girl. She's mine now. Now, here's, back to the point I was making yesterday, right? About why it's so important to position yourself during market downturns to be able to capitalize on deals. Look at what Sam Bankman-Fried has done. The companies he's acquiring, the amount of money he has ready, capital he has available to deploy to purchase BitThumb, to launch stock trading. If you take that, but shrink it down to a smaller scale to you personally, it's the same concept, right? When everything's good and Hopium is at its best and everyone's making money, start thinking about the next bear market. What can I do? Can I take some money from here and stash it somewhere, stash it in cash or stash it in stable coins? And that's where real wealth is built. In times like this, where everyone else is scared and the competition has gone away and the bidding wars are gone, you can come in with a lowball offer and say, here's your lifeline, take it or leave it, because I know there's no one else offering you anything close. So if we can do that on a smaller scale with our money, 1-2 cycles, man, you build wealth for yourself. It's not financial advice, but just my thoughts and seeing what successful people do and what large corporations do with their money and their resources. We can do the same, but on a smaller level, on a smaller scale. So what is bigger, Robin? The stock trading going live and intermingling traditional finance with crypto, or buying the second largest exchange with 8 million users?
Oh, them buying BitHum is huge. We don't use it here in the U.S., but let me tell you, man, that is a major.
BitHum? Oh, I always thought it was BitThumb. Anyways, it could be either. Is it BitHum or BitThumb?
Wouldn't be BitThumb.
Because there's only one T, I get it.
ByThumb, or it's BitHum.
Hum. Anyways.
BitHum, also known as Behemoth. They are not.
You think that's a bigger?
Oh, yeah. Yeah, for sure. Now, for me, them doing stock trading, Getting into
You don't like it?
you're getting into the SEC danger zone. That's all I'm
That
saying.
might be a good thing.
SEC danger zone, bro.
Okay, but hear me out though. Python. That's what Talk said. Hear me out though. If they're already, obviously they got to register with the SEC to do the stocks. Can you argue that they don't have to worry about the SEC coming after them like they're doing with Coinbase?
You think
less
any company? I'm not even talking about crypto. If you're a stock exchange, there is no company that is not worried about the SEC. So you can rest assured.
Less worried. Okay, less worried.
No,
Less
it doesn't
likelihood.
even matter. You have to, if you want to survive, especially in a in the crypto space, you want to survive. You got to make every move as though the SEC is literally going to sue you the next day. You need to be like, all right, cool. We're going to do this.
That's terrible.
Hey, we're going to probably get sued though. How do they feel about this? Okay, well, let's offer this. Okay, we're probably going to get sued, but what can we do to prevent that? Or, and so.
That's interesting. I think the move to offer stock trading by FTX is genius. I think that it obviously when you merge traditional investors with crypto investors, you merge them. The idea is to get people on your platform and keep them there.
All of the services that offer all of the major stock trading companies are registered with the SEC. And so I don't know if Robinhood is or not.
Or they have to be.
I mean, I don't know.
All I'm saying is we're trying to bring in people from the traditional markets into the cryptocurrency markets. And what better way than give them a platform?
Yeah, Robinhood is registered with the SEC.
They have to be. They sell stocks.
That's what I'm saying. So if you're literally saying exactly what I'm saying. So is FTX going to go register with the SEC?
They already did.
They did?
Well, they had to have, at least their stock side of it. Now, I don't know how that works. If they split it up into just a crypto side, or is it FTX as a whole that offers both that they're registering with the SEC? But obviously, if they're offering stocks, they have to have registered at least part of the company with the SEC. So will people look at that and say, hey, this is an SEC registered exchange. I feel safer putting my money there. Who knows? Now, I don't think it's relevant, but that's me knowing everything I know about crypto in the space and being in it for a long time, where the novice.
Yeah, I don't see anything saying the FTX is registered with the SEC. I know this just came out.
Right. Yeah, I mean, but like just from a common sense.
Coinbase isn't registered with the SEC.
Correct, but they don't sell stocks. Stocks are securities, so if you sell securities, you have to be registered. Right?
I'm just saying that you're getting into murky waters, and is it worth it? You get what I'm saying? Like, is it worth risking your entire business model, getting sued by the SEC by entering the ring with the SEC and trying to register part of your company and not the other part when the entire parent company is doing both? And so I don't know.
Obviously,
man.
To them, it was worth the risk.
I know. Obviously, they have teams of lawyers, so they know the ins and outs better than we do. And I don't think they would obviously put themselves.
You look at Sam Bankman-Fried.
I don't think they would put themselves in a situation where they would be risking the company's future by making this move. So obviously, they vetted it out. But I'm just saying, from outside looking in, is that really what you want to do? You want to go and play around in the SEC's backyard? That's all I'm saying, man.
Well, if they figure they're going to have to play in it sooner or later, then might as well get a head start on it, right? All right, let's move on. Remember when the Harmony One hack?
Mm-hmm.
Well, they have a proposal. They're proposing minting billions of the Harmony One native token to pay back hack victims.
What a terrible idea.
Oh, hold on. Harmony's core team has proposed a hard fork to mint billions of new One tokens. Proposal is part of the plan to reimburse victims of its bridge hack last month. If you're not familiar, this past June, a month ago, hackers stole $100 million worth of crypto assets locked on the Horizon Bridge, which is the Ethereum bridge. The first option is to mint a little under 2.5 billion One tokens, coming out to approximately $50 million, which the team claimed would be enough for 50% compensation to victims at the current market price of 2 cents. The second choice is to mint 4.97 billion tokens, which would bring it up to about 100 million in value, which is enough for full compensation. This is a quote from The Harmony team, we decided against using the foundation treasury in the interests of the longevity and well-being of the project, as reimbursing from the treasury would greatly hinder the foundation's ability to support growth of Harmony and its ecosystem. Community is largely unhappy with the proposal. And this whole thing of it would be enough to compensate at current market price of 2 cents. Well, guess what? When you inject another 5 billion tokens, it's not going to be 2 cents. Right, Robin? I agree with you. I think it's a stupid idea.
Yeah, it's so much. It's the same problem that we have here in our U.S. economy. And if you print tons of money, obviously you debase the currency value, your spending power goes down. And if you look at Harmony One and you take a look at how many tokens they have at the moment, anyways,
13.1 billion.
Yeah, so you're basically increasing the supply by 10%. Is gonna, and then
about 40% if they go with the full 5 billion.
And then on top of it, so you have the increase. So there's circulating supply of 12 billion. So you increase that by 1. So you increase it by 10%. And then on top of that, to compound that issue, you're giving 10% of your supply to people that are pissed off and want to exit.
Yes.
And the first thing they're going to do is you're not talking about institutions here. And if it was institutions, they might be able to sell over the counter, do something different. You're giving
in the order books,
you're giving $1 billion to people that are going to instantly dump it on the order books. And so you could see the price for one, just off of straight inflation, go from 2 cents down to probably 1.5. And then from there, dumping the order books, I mean, you can see going down even further, another 80% down, maybe.
This is a terrible idea. So,
how do you even propose this?
Because they don't want to use their treasury funds. I'm just like, yo, this is like a pivotal moment. Okay, how you had a hack $100 million. Your first plan was to offer a $1 million bounty to return $100 million. Dumb. Then you up that up to 10 million. Better, but nothing came out of it. And now instead of making people whole and and getting people to believe in your project moving forward, you don't want to spend your treasury fund. You just want to mint more tokens, create money out of thin air to pay people off. Like, you're at a pivotal point in your project's life. And what you decide to do next and how you decide to compensate people and move forward is going to be whether you're going to be around in the next bull market as a prominent blockchain or whether you're going to fizzle out.
It's a terrible idea, man. And you know what? You're going against the basic business practices. And I don't know, man. It's just like, who the hell came up with this plan? Like, what I don't understand is how people in government and how people behind multi-billion-dollar companies or protocols in this situation, and I know Harmony One isn't a multi-billion at the moment, but I think at one point in time it probably was at $1 billion, and so that's a lot of people's money you have invested. Why don't you go take some economics courses? Like, why don't you take a business management course or like I don't know, man, like invest in yourself. Like, I don't know, man, even if I don't have time to if I don't have time to go to take a college course, at least try to educate myself or motivate myself at least. A lot of those motivational things, those podcasts. You guys haven't experienced motivational
damn, bro.
Speeches. Oh, you know what? Actually, I got a good story. Let me get a story time.
All right.
So, on the subject of motivational speeches. So, I was listening to a motivational speech in my car, and my wife's with me, and it was about the lion mentality. And so it was about the lion, king of the jungle, apex predator, fearless, whatever. And you can translate a lot of those personalities, traits to successful business leaders. And so I'm listening to it and I'm just like, yeah. Anyways, I turn it down. I'm kind of juiced up. I look at my wife and I'm like, hey, I'm like, are you a lion? And she was like, no. And I'm like, okay. So what animal are you? And she looks at me. She's like, I'm a hot dog. And so at first I'm like, hot dog. And I'm like, what are you talking about? And then I'm just like, but then
in 2023, as I mentioned.
Sorry, my apologies.
So then I'm like, a hot dog, huh? And she breaks it down to me. Hey, man, this is yeah. I apparently, she kicked me some knowledge. She was like, hey, man, this is everybody loves hot dog. It's America's pastime. Who doesn't love a hot dog? And then she started just making this case for the hot dog, and I was sitting there and I was like, I want to be a hot dog. So, anyways, just a different perspective on life.
Yeah, apparently 8 people don't like hot dogs because we lost viewers. So real quick, so pull up my laptop, Rocco, and we're only messing up the flow because obviously today's a big day. The Dow jumps 200 points, Nasdaq jumps 3% as Powell says Fed could slow the pace of rate hikes. Okay, and he is currently talking live right now on this is on Bloomberg. I don't know if I want to show it because we don't know where he's at, what he's talking about, but Nasdaq up almost 4%, S&P up 2.5%, Dow up 1.2%. Japanese markets are up 0.25%. And if we take a look at Bitcoin is currently at 22,500. Look at this ginormous candle here. This is on the 1 hour chart. Tons of volume behind it as well. This is on the 1 hour chart. So I do think we will get to that 24K mark and then we'll come back down, but we'll see. But they're slowing rates. They're planning on slowing them down. So, yeah. You got anything?
Big rally in the markets, huh?
Yeah, 4% on the Nasdaq is huge.
Ethereum's up 15%.
Also, yeah. Also, let's take a look. Let's take a quick look at the Ethereum chart. So if I go to the 4 hour on ETH,
What's funny is that they're increasing the interest rates to slow the economy, and yet the economy is rallying behind the stock market with the news of the rate hike. It's like your plan is to slow Wall Street, slow spending, slow economic growth by increasing the interest rate. And when you announce your interest rate hike,
it pumps.
It pumps. Kind of funny. And so we've never seen a recession like we're in now. We've never had money printing like we are now. So we're in uncharted territory. So a lot of the ideologies that we're in now, I still believe that these rate hikes will crush demand and it will slow the economy. But, there's other factors at play in, the global economy, the U.S. economy. There's thousands of different factors, probably millions of different factors that go into what raises GDP, for example. And it's interesting to see the cause and effects of monetary policy. So.
We'll see. Like I said, the funds rate we're at now is considered neutral. So anything above it is when the economy really starts to contract. We'll see if that happens. Also, real quick, Blake with 2 E's, with 3 E's, been a member of this channel for 2 months. Blake, we appreciate it. And also our man, our whale, Marky Mark, been a member for 3 months. So we appreciate the support, you guys. Thank you so much for supporting this channel. We appreciate it. We love you guys. All right, let's move on to some SHIB news. The SHIB burn rate surges amid crypto card release as a rally in sight. The proposed release of a crypto card by Shiba Inu has influenced the meme coin burn rate. The burn website of SHIB announced that it was working towards a crypto card for payments. And this is what it's going to look like. So if we replay this, there's no sound. So coming soon, make payments, burn SHIB. So there you have it. The SHIB burn card would allow burning a small amount of SHIB tokens anytime a user uses the card for payments, the burn rate surged by almost 200% once this was announced. 174 million SHIB tokens have been burned since then.
Great.
Surprisingly, there was no effect on the price.
I'm going to go buy some SHIB right now.
Actually, SHIB was down. So I did some math, okay? So the whole SHIB to $1 narrative, let's say we're at 450 trillion tokens, right? Because half of it was sent to Vitalik. They've already burned some. So would you say that for SHIB to get to $1, market cap 100 billion, not likely, but possible if the overall crypto market's at $6 trillion or so, right? Just play along. Okay. So for SHIB to get to $100 billion, 100 billion tokens, so it can get to $1 and be a $100 billion market cap token, it would have to burn 1 billion tokens every single day for the next 1,232 years. And off the back of one of the biggest announcements that saw the burn rate surge to 200%, and in a 24-hour period burn only 176 million tokens. At that rate, just put a zero at the end, and you're looking at 12,320 years until we get to the dollar SHIB. So this whole burning thing, I believe community
is their number one utility.
I believe community is a utility, but burn rate, to me, I don't see that as it.
12,000?
12,000 years.
I want to make a note.
Yeah.
How much will be Bitcoin in 12,000?
I'll see you on the flip side, my friend. So just something interesting.
It's for me. I think this community thing is so overblown.
Look, community is a utility, but if burning tokens is the number one thing you talk about,
it's like crypto's here for a reason. You know what I mean? Satoshi wrote a white paper as a peer-to-peer, form of payment that circumvented governments, businesses, and basically just removed all the influences of corporations and governments. And it's accomplishing its mission. And on top of that network is built other utilities in the form of smart contracts, layer 2s and lightning and all of this. And that has spurred into creation other cryptocurrencies that do facilitate smart contracts that not only can transfer monetary value, but it also transfers data at the same time. So instead of having two entities receiving money and then someone else saying, hey, they sent this, it received, cool, release the funds, whatever, all done efficiently. Fortunately, this community thing, it has a power to influence price, but it doesn't influence productivity on the economy. It doesn't change what this space is changing on a global scale. And so for me, I don't care about collectibles. I don't care about what the next person bought or how much tokens you're going to burn to inflate the price. I care about what it's replacing. What shit fucking entity that we have, bank, government, 60% inflation in another country. I don't care about those institutions. And so for me, I don't care about inflation. Or I don't care about burning.
I don't
care about the burning aspect. I don't care about the community. And I don't care about the short-term price movements. I care about replacing that trash with something that is so fundamentally better and just makes so much more sense. Because the people that are in power that use the dollar, they don't know what the hell they're talking about. We've been saying it.
Yeah.
And so they don't know what they're talking about. I don't trust nobody. You don't trust politicians.
Hell no.
So why not just put a trustless monetary policy in called cryptocurrency that can't be influenced by other people?
Well, that's what Bitcoin is. Why Bitcoin maxis talk about it all the time.
The shit crap is.
I could tell.
And it's all they're so proud of their burn.
Yeah, I mean,
they're so proud of it.
Look, I believe in community again, but the burning thing, if that's your number one utility, you can miss me with that. All right, last segment of our show. Big D, this is for you, my friend. NFTs, let's go. pull up my laptop. What are dynamic NFTs, the living tokens that change over time? Dynamic NFTs, these NFT tokens can shift and mutate over time according to programmable features encoded by their developers. A living NFT is all about dynamism, however you pronounce it, as opposed to a normal profile picture such as a CryptoPunk, which remains static. Living NFTs offer exciting ways for holders to link their behavior and actions on-chain and in real life with the NFTs they collect. The dynamic NFTs and metadata can change based on varying conditions. That can include the passage of time, interactions with other NFTs, or more commonly, external data, including information drawn from sources that monitor real-world data like weather vanes or real-time sports scores. So this is pretty exciting to me. I think about, Robin mentioned that, what is it? Tamagotchi. You have, the stuff where, you raise a pet, or, my daughter's favorite thing is the Barbie that makes noises. And when you feed them, it makes a noise. And when you change the diaper, it makes a noise or whatever. So this is something that transforms collectibles and NFTs into something more interactive. So you can have an NFT of yourself, or when you're in the metaverse, an avatar, and based off of information, whether it's weather, if you, like me personally, when the weather is gloomy, I'm gloomy. Weather affects my mood. You can have the same thing essentially dynamically translated to your NFT, your avatar. It could be stuff like minting a sports collection, NBA players, where you have, if Steph Curry goes off, that data gets put into the smart contract, and the metadata of your NFT changes, so it becomes more valuable. It becomes more rare. Think about fantasy sports. The fantasy. Have you ever played what are those, Dynasty League, where you draft players and you hold on to them and you essentially grow a team? You can have the same thing, but with NFTs. And as they get better and, workouts, whatever the case may be, it opens it up to so many different possibilities of not just buying a $300,000 picture of a monkey. Are you as bullish as I am on this, Robin?
Yeah, I think you're going to see there's going to be so many different use cases for NFTs. And right now we're in the infancy stage. And so what we've seen has just been the JPEG, but I think it's going to be, why not have a whole video game that's built on your NFT?
Yeah.
Because that's kind of the,
right.
You're growing your character. And so,
Big D brought up a point. He said it goes against decentralization because now it's based on a central authority. That's not true. You have oracles like Chainlink that do this already, and they would just do it into this smart contract versus one on Ethereum or whatever the case may be. And so the smart contract will be coded to when it gets fed this data, it'll change the metadata to X or B or whatever the case may be. So it'll still could be decentralized. So pretty cool. Let us know what you guys think. Is this something you think is exciting? Put a 1. If put a 2.
I have one project. So this is some of the different functionalities of NFTs. So here's one. So how you have the ticket system. So here, you think of like a hotel or a condo where you'd get you get a room key. The same thing here. So these NFTs for the Ethereum tower. So it's 2 different towers, and it's like a metaverse. And so you have a metaverse where you have your home in the Ethereum towers, and your NFT is essentially your room key. So here's apartment 4, floor 78, tower 1, and so on and so on. And then, your penthouse suite, your high rise, the room at the very top will be worth the most. So also some other iterations of NFTs.
What are your thoughts on fantasy? Final Fantasy.
Man, I'm Final Fantasy, the video game?
Yeah.
Man. That's my jam, right?
Well, I got some Final Fantasy news for you. This will be the last topic we cover before we sign off.
Okay.
Engine and Square Enix partnership develops Final Fantasy 7 NFTs. Together, the two will develop a digital collection of Final Fantasy 7 25th anniversary cards and figures available on Engine's Infinity Network, which is also a parachain on Polkadot. This partnership opens up a whole new world of digital collectibles that can be used in games. Fans of Final Fantasy will get to experience NFTs without even realizing they're on the blockchain. For the crypto industry, it brings more mainstream attention to the power and potential of NFTs. again, I'm not a big video game guy. I know, Robin. I know you
Oh,
were
this
big
is my
on.
game right here. So yeah, you got Cloud there at the top. So that's with his big ass sword. The main character.
Who's this?
Forget.
You looking cute?
It's my neighbor.
Yeah,
My
that's
neighbor.
that's the guy that he comes from the carnival. I forget his name, but you got Sephiroth, the main villain. Really good game. That was one of the first games that killed off a main character. So you had somebody you played with for a while, and they just they died. One of the girls.
They died.
But yeah, did they say what these NFTs will look like, or are they just or what they're gonna kind of the premise behind them?
No.
Did they say they're gonna have utility and things? Probably not. Just
No.
digital.
As I said, they're just bringing the characters to the digital world.
Here's the thing. It's like the nostalgia for this game, for me, it holds a lot of value. And if they could integrate this into the game to where it could provide more value, I would be extremely interested. And I think that, right at face value, cool. Yeah, I love this game. The NFTs, sure, I'm sure they'll have some value because there's a huge Final Fantasy VII community.
Is there?
Huge.
Really? Okay.
Huge. This is the biggest game out of their franchise. You could argue that Final Fantasy III, which came out on Super Nintendo, but still, I think that pales into comparison the following this one has. So I think that there's going to be some value to it just off of that. And I think, and we were talking about it yesterday, the demographics or the age demographics for the NFT community probably lines up with the age demographics that were growing up with this game.
Right.
And so I think this would be a great buy if you could get on the whitelist. I'm sure it's gonna.
You can pre-order.
Yeah.
Now, and it's supposed to launch in 2020.
But like I said, I do think that I still think they're falling short, man. And it's kind of disappointing, man. Why not create a game with the idea of enhancing enhancing the game by using NFTs? And it doesn't have to be the 10,000. Doesn't have to be the 10,000 framework collection. Where you meant 10,000 and then like that, because obviously if you're gonna have a successful game, you're gonna have more than 10,000 players.
Yes,
you're gonna have 1 million, and so why not create certain artifacts or weapons or skins or whatever it is that you can purchase and trade, and they have a different rarity value, and the rarity value is how many there are. So maybe it's a 1 of 1. Or maybe it's more of a common sword, for example, and that ends up being, 1 of 1,000. And so then you can have this diverse ecosystem of NFTs that on their own create a marketplace. And it's not, you don't go by this floor price model because everything is equal for the most part. You go by the game was built from the bottom up with NFTs in mind, and you have a AAA franchise, and you have a huge community, and you can monetize and transfer your assets to other Final Fantasy. You know what I mean? Like you could make this so much better. I know they didn't go into detail. I'm just hoping it's not just 10,000 JPEGs of the main characters, because that would be kind of whack. And if they did it right, man, they could set a precedence, set the bar real high for what to expect with NFT.
especially if you have a community like you said as big as they have.
Oh, their community is huge. I mean, you go to Comic-Con, bro. There's at least a couple thousand people dressed up as Final Fantasy VII.
Really?
Oh yeah, that main character, Cloud Sephiroth, and then the girl that died and all that. That's easy go to.
We'll see. We'll see
Now,
as more information comes out.
Is that it for NFTs?
That's it.
I do want to say before we sign off, went and saw the movie Nope last night. Nope. Nope.
Who plays in that again?
That's the Jordan Peele is the director. And so really good movie. If you guys are looking for I love
no idea what's going on the stream, but a good thing that happened at the end of the show. Okay. So, we are done. Rock and roll the outro.
There it goes. It's back.
Back.
We're good. All right.
Yeah.
Friends, family, to all the new people joined us, welcome to our growing crypto community. We appreciate your continued support. Please make sure you come back tomorrow at 10:30 a.m. Vegas time. Another big day as Q2 GDP numbers will come out tomorrow, the first iteration of it. We will discuss that, what impact it will have on the economy. So on behalf of myself, Robin, and Rocco, we love you guys. Until tomorrow. Peace.
See you. Hey, Mark, I got the camera. I want to thank everybody that donated for the camera. Thank you.
Finally got his man a webcam.
Oh, yeah, that's right.
Good look on you, Rocco.
Yeah.
Thank you. Look good. Look at that.
Hey, people said the stream just noped.
Whoa, whoa, yeah. You say she love me, but that's when she rockin' Prada bag. That she ready for the next, I won't not so fast. Slow down, slow down, slow down, girl, don't you crash. Whoa, whoa, yeah. Cause we can mess up that pretty face, but we can fuck up that pretty lady. Tryna kiss up, I'm in your place. Man, this shit so crazy. Never thought I'd be doing shit like this again. Put that effort in, girl, then I will pay you. Crash that thing out the park, now I feel like Babe Ruth, baby. This shit I can't do, baby. No, I can't move, baby. Nothing I can't prove, baby. I got 16 missed calls on my phone. Times change, Mickey D's turn into Rabuchon. Kick my feet up, drink leader, smoke on a new strong. Couple margaritas, senoritas, I goof off. I got 16 missed calls on my phone. Times change, Mickey D's turn into Rabuchon. Kick my feet up, drink leader, smoke on a new strong. Couple margaritas, senoritas, I goof off. Question marks along your brain, wonder if you should try again. Look at me inside your braces. Can't focus when we face to face. Plenty things I could go say. Name a place I go and pay at. Said she want no boo. Been around the world, plenty things I can show you. Taking flights to GA for our soul food. Gotta pay 1K for GA at my shows too. Keep it 1K with my fans even at my lows. Ooh. That's why I'm back. Show your man the things I've showed you. Tell your man how I used to hold you, but I won't hold you. Your new man is lame and all I spoke is true. Light one smoke for you. That sadness comes with coping too. This madness come with shit that's overdue. You strong by yourself, nobody else holding you, but I ain't holding you. You the one I need when I'm off that perk or two. Hit that thing early, got you sleep like curve for you. All these lame ass bitches I curve for you. All these packs and pearls I burnt with you. It's up now, baby, it's stuck. They can look, but they cannot. They gon' hate, so I keep that tucked. All this ice on me like pucks. I work hard, don't need no luck. Only thing I need is my Glock. When there's bread, these birds gon' flock. When they dead, I let them rot. I ain't tryna leave you up, I said stop waiting. And I don't got time for these pussy fuckers playing. You gotta read between the lines that I am saying. Ain't got no time for no more bullshit conversations. Cause I got 16 missed calls on my phone. Times change, Mickey D's turn into Rabuchon. Kick my feet up, drink leader, smoke on a new strong. Couple margaritas, senoritas, I goof off. I got 16 missed calls on my phone. Times change, Mickey D's turn into Rabuchon. Kick my feet up, drink leader, smoke on a new strong. Couple margaritas, senoritas, I goof off.